It's quantitative strategist for dailyeffects.com, here to talk about trades and just general strategy for the week ahead. So it's shaping up to be a bit of a quieter week for a number of reasons, and we'll start off with something simple. And it's what I always like to start out with. Actually, that's not it. Give me 1 second. So what it is basically just taking a look at what traders are betting on and hedging against. And that's a somewhat fancy way of saying, what do traders not only believe, but where are they putting their money? And right now, 1 second, let me get rid of this. Right now, we've seen an important pullback in volatility prices. And why does that matter? Well, to put it very simply, volatility prices reflect, actually I can make it a little clearer going right here, volatility prices reflect how much are traders betting on and hedging against big moves in the week ahead? And that matters because it gives us a backdrop. Can we expect the Euro-US dollar to have another 500-point week, or it hasn't recently, but for argument's sake? Or are we, in this case, more likely to consolidate? So right now what you're seeing is, and this headline is a bit outdated, so I apologize for that. What you're seeing is that volatility prices have just generally fallen since last week, and actually the past several weeks. And that makes sense when you consider that we've gone from a couple of very busy weeks of economic event risk to something where this is the Daily Effects economic calendar, and if I want to see what are the biggest most potentially market moving events, I'm going to go right in here to filter and only give me the high importance events for the days ahead. And what it gives me is, not much. Seriously, not much. I mean, today we have the Bank of Japan, which isn't here actually. It should be. But it's probably not going to be much of a market mover. Also, or tonight I should say, we have the Bank of Japan monetary policy statement that should show up as high, although they're really unlikely to do anything big. And then beyond that, you have a bunch of second-tier data. Sterling CPI, RBA minutes could potentially force some short-term moves in the sterling and the Australian dollar, respectively. But at the same time, you don't have that top-level event risk from a Fed meeting, non-farm payrolls report, or even an ECB meeting, Bank of England meeting, and so on. Just not much to go off of here. So what does that mean? You do have the Fed minutes, which could be potentially market moving, although I think there's a lot of certainty surrounding the Fed, in the sense that I think they did the responsible thing in just keeping the taper exactly unchanged in their past meetings. So these minutes, and normally this might be a high importance event, but realistically they're just not going to say much, I think, especially given that Fed Chair it'll take a while to get used to that. Fed Chair Janet Yellen already made the Fed stance fairly clear. So, long story short, we just don't have that much in the way of big economic event risk. Volatility prices are quite low. It reflects the fact that few people are betting on and hedging against big moves. So, in effect, where does that leave us? I think it leaves us in a pretty clear place in that, look, and I wrote about this on Friday. Let me see if I can bring up that chart that I was just preparing for this webinar. And I don't know where I put it. Bear with me 1 second. That's not it. Actually, is that it? That might be it. I'll tell you right now. So on Friday I was talking about this. All else remaining equal, the US dollar tends to do fairly poorly. Actually, I know where the chart is. My apologies for the confusion. I accidentally dropped it in here. All right, so all else remaining equal, the dollar tends to do fairly poorly when volatility is super low. So all else remaining equal, it's actually looking to be another bearish week for the greenback. And I'm putting up a chart of the Dow Jones FXCM Dollar Index, which, if you recall, or if you're not familiar, measures the dollar's value against the foremost liquidly traded currency pairs in the world, namely the Euro-US dollar, the dollar against the Japanese yen, the British pound US dollar, and the Australian dollar versus its US namesake. So this is kind of markets in a nutshell for me, at least as far as the dollar is concerned. You could argue that, or definitely can argue that the Japanese yen is its own beast right now, but this is what we're working with. And notice that I've plotted, a couple of trend lines here, but this is one dating back to the dollar's lows back in September of 2012. You connect that to its lows just 13 months later, and you got a trend line coming in right around here, 10.15, which could be a point of contention, especially since it coincides with a potentially noteworthy, I think it's noteworthy, Fibonacci retracement mark. So 10.510 would be that level in the dollar index. This could be a big deal here. Ultimately, though, I don't expect a substantial dollar bounce. Given such low volatility expectations, given the fact that markets are positioned for a whole lot of nothing, I would actually be bearish US dollar, just generally. Looking for opportunities to sell it. And you can see that, via major counterparts. So in the Euro's case, the Euro's gotten away from us a bit here. It's coming up on important trendline resistance and Fibonacci resistance. So I wouldn't necessarily sell the dollar here. And of course, if we're talking about selling the dollar versus the euro, we're talking about going long euro US dollar. Not sold on that right now, just because, the dollar is likely to head lower, but you're not likely to see a substantial move lower. So if anything, I'd buy dips on the euro US dollar here. Much the same can be said for the sterling, although in the sterling's case, the sterling has just taken everyone by surprise, present company definitely included, and it's a pair on which I focused last week for a good reason, because it was at multi-year highs, but coming up on major resistance. I'm looking at the disparity index here, which measures the sterling in this case against its 200-day moving average. You see that it's about 6.25 percentage points away from its 200-day moving average, which is actually a fairly big deal. We've obviously gone more extreme, and the major sentiment extreme is only clear in hindsight. It's really difficult to go in there and say, I'm going to pick the exact sterling dollar top here. So realistically, if I'm looking to trade the sterling, I'm looking to buy dips. I'm not going to sell here. I'm not going to buy here either, because there's just not enough in the way of, especially when volatility prices are so low. It shows you that relatively few people are betting on and hedging against a major breakout to the top side. And I can see that. I don't show it here, but looking at recent activity in sterling dollar options markets, there are some people buying some way out of the money protection, against sterling dollar upside. But for the most part, most of the volume is fairly even. Not that many people fear an explosion higher here, and I think that's ample reason to believe that the sterling dollar might set a short-term top. If anything, I'd be willing to buy some fairly sharp corrections. And, we can go down the line and say a lot of the same thing. The Aussie dollar is an interesting one because, along with gold, for example, gold is something that also has taken a lot of people by surprise, again, present company included. I wasn't expecting gold to go on such an uptrend or winning streak right here, although fundamentally I think that a lot of this is just short covering. Fundamentally, I think that a lot of people have been sitting on their hands as far as gold is concerned, especially large speculators. So when you have a whole period of inaction and uncertainty, and all of a sudden the dollar is just falling elsewhere, it's probably a good time to get out of that short position. And I think that's a lot of what's driving gold here. So am I sold on the fact that it's set an important low? Maybe through the short term, but honestly, I don't think this is a start of a much larger gold move to the top side. For the most part, I just doubt that the dollar is going to crash lower. I am interested in, however, playing it to the downside once we get price moving in our favor. And in concrete terms, again, that means waiting for that pullback in the euro dollar, waiting for that pullback in the Aussie dollar. And if you trade gold, unfortunately I can't, at least not spot gold. I can trade futures, although I haven't in a long time, full disclosure. Waiting for that pullback in gold prices before you sell the dollar, which in this case means going long XAU USD. And that's the general outlook. I mean, it's very dollar-centric right now, just because always is. As far as most FX trading is concerned, the dollar comprises something like 80% of all, and all of the percentage points percentages add up to 200% because there's two currencies in every trade, but the dollar forms part of about 82% of all of those. So that's why I focus on the dollar. But obviously, it's still relevant to talk about other major currencies The yen, for example, the yen is kind of following the dollar pretty well right now, just because you're seeing, take a look at the dollar yen right now, and it's gone a whole lot of nowhere. It's been very frustrating, to be very honest with you. And the yen crosses are similar. We're trading a whole lot of nowhere. And the fact is that, I'm not going to try and fit a square peg in a round hole and say, I want to trade the dollar breakdown right now, because I just think it's fairly unlikely. I could theoretically say I'm smarter than everyone else and, front run it and buy the euro, buy the sterling against the greenback, but I just don't think that's a good probability. It just doesn't represent good risk reward as far as probabilities are concerned, and it's a numbers game. That's what it comes down to. In terms of strategy, then realistically, I'm looking at a whole lot of range trades and kind of pullback trades. So, for example, the euro dollar, I just don't like any of our sentiment-based trading strategies in the euro dollar right now. Well, full disclosure, it's because none of them have done especially well trading the euro recently, and a couple of them in particular are very streaky. For example, I'm currently on Mirror Trader platform, and just looking at the performance, past performance is not indicative of future results. Let me make that absolutely clear. But I'm looking at the performance of our various sentiment-based proprietary trading strategies here. Excuse me. And taking a look at, actually, let me get you a link to this so you can likewise kick the tires and take a look at what I'm watching here. So you can sign up for a demo account for this platform right here, which will let you, monitor the performance of our various proprietary trading strategies. And right now, the performance, this is a simple equity curve for our sentiment-based Momentum 2 trading strategy on the Euro-US dollar, which is primarily a trend-following system. You can see that recently it's not done anything great. It's basically sucked wind. It hasn't lost a lot, hasn't made a lot. I'm not nuts about it, because realistically, we're going to have to see an extended trend, or not even an extended trend, but a trend. Right now, it's long euro from 136.70. I'm not nuts about the position. Like I said, if I were to get long euro, it would be on a pullback. So right now, I'm just not crazy about it. And a lot of the same can be said for other currency pairs. You can see the recent closed positions here. The past 2 or 4 trades have been losers, and it hit 2 trade winning streak before that, but for the most part, it's the kind of strategy that does well in faster moving markets. And a lot of the same can be said, for example, the dollar against the Swiss franc. Here's one place where I'm kind of interested in seeing what happens next, just because if you look at a dollar Swiss franc chart, let me bring back my chart right here. If you look at a dollar Swiss franc chart, it looks like it's holding the key 89 mark, at least so far. And, we have fairly substantial support, just 80 points away, not even, which could be a big deal, could lend its weight in the dollar's favor, especially since the Swiss franc is probably going to do best in faster moving markets. It is more of a safe haven play than even the dollar in many instances. Actually, that wouldn't necessarily be the case right now, but for argument's sake, the Swiss franc tends to do better in faster moving, more volatile markets. I'm not nuts about it. The dollar Swiss franc and the euro Swiss franc, for that matter, look like they might be petering out here, losing traction to the downside. And that's enough of a reason for me to say, okay, well, this trend following system, it's also called tidal shift. And the reason it's called tidal shift is because it attempts to catch the reversal. Well, if Momentum 2 goes long, the dollar against the Swiss franc, and actually it's currently short, but it's only, it's floating a 10 pip gain. Not exactly a big deal here. If it goes long, I think it could be a decent play here. Beyond that, the sterling dollar has been a great position. Last week I said I liked a lot of, actually, that's incorrect. I was going to say breakout, but that I confused the matter. Last week was much the same thing here on the sterling dollar. And volatility here, you can see, is very high. I distill those volatility indices into individual currencies here, And actually, well, more like I take these numbers and make them volatility indices. So, this is measuring volatility prices on the sterling dollar in particular, and they're very high, as you might imagine, when the currency pair is breaking a fresh multi-year highs. But realistically, I can't get that excited about breakout trading to the top side. So I'm watching our Momentum 2 trading strategy again because it tends to do fairly well if markets are on the cusp of a major reversal. Actually, I confused the sterling dollar with the sterling yen. Last week, I was heavily favoring breakout trading the sterling yen, and actually it worked out okay. It worked out very well. But right now, I just don't think it has enough traction to the top side. The British pound itself doesn't have enough traction to the top side, in my opinion, to make that an attractive play. So you can see just generally what's going on, and I'm getting questions about the Aussie dollar and the dollar CAD. They're kind of in the same boat for me just because they're both commodity dollar plays. Let's bring up my chart again. The Aussie dollar is in an interesting spot because, like gold, it's confounded a lot of expectations. Again, I think a lot of this is just people were sitting on short positions, and suddenly, you're seeing a lot of people dump those short positions because the dollar's not going anywhere, and people are getting nervous. So if anything, I have a modestly bullish Aussie dollar bias, modestly bearish dollar CAD bias, actually, which is a fairly significant break. But at the same time, I'm not chasing here because there's not enough traction at the top side. Short covering rallies can be fairly violent, but it just doesn't look like we're going to get the panic necessary to really set them off in a greater way, especially given the fact that the Aussie dollar is coming up on some fairly significant resistance, and you can even eyeball it here. This would represent, likewise, some fairly substantial Fibonacci resistance, trend line and 200-day moving average resistance. And you can see here, actually, one of the cool ways to use this disparity index chart is just to get a very simple visual representation of how important a given moving average has been. So in this case, let's just do this on the Aussie dollar. And you can see that it's gravitated towards it a lot in the past few years. Obviously it's traded right through on a number of occasions, but I don't think it's a coincidence that, for example, in October of this past year, it almost stopped in reverse almost exactly at its 200-day moving average. Could it happen again? I will note that the trough here was shallower, which does suggest a drying up in downward momentum, but I can't get that excited. A lot of the same stuff can be said about the dollar CAD here, although in this case, we've definitely seen a bigger move lower in the Canadian dollar versus, or at least in recent months, Australian dollar has been on a substantial downtrend as well. But with this pullback in the greenback and the fact that you're just not getting that much traction in terms of market volatility, the Canadian dollar tends to do poorly, and it was especially doing poorly when the S&P 500 is selling off, for example. If anything, I'm looking to the downside, but I can't get terribly excited about getting long here, or getting short here. All right, so guest asked a great question here. Since January 29, the automated breakout 2 strategy has bought dollar CAD 6 times in my account at least. 5 have closed with losses, and the 6th is currently floating a loss. My question is not about the losses. I know they're a part of trading. My question is about the mechanics of the strategy, which I thought I understood. Is there somewhere where I can see the daily SSI values for the past X number of periods to help me better understand and evaluate the strategy? So it's an excellent question, guess. And you're absolutely right in the fact that as far as breakout trading was concerned, I thought the stars had lined up very nicely. And actually, let me illustrate to everyone what Guest is talking about here. So this is the breakout 2 trading strategy. This breakout 2 on dollar yen, it's actually done fairly well, especially since the middle of January, but that's not what we're talking about. Let's go to dollar CAD. So the dollar CAD, the strategy had done extremely well, but like anything else, nothing moves in a straight line, and ultimately it was a difficult decision, but well, this week it was a less difficult decision because a lot of what drives my strategy biases on these currency pairs is this volatility number right here. If this volatility number is above 75%, past performance is not negative future results, but on the whole, the breakout 2 strategy tends to do better than otherwise. So this number has been fairly elevated for a while now, and yet the dollar CAD is pulling back. So clearly, it just didn't work out in our favor. To speak most directly to your question, yeah, I mean, the way the strategy works, and I can show you daily values for SSI on the Canadian dollar right here. So you go to Daily FX Plus, or let's start from the beginning. Daily FX Plus is right here. Log in using the same user and pass that you use for your live trading account. And if you're on MirrorTrader, you definitely have access. Actually, that's not where I meant to go. And then you click on the Speculative Sentiment Index right here. You click on the most recent report, and sure enough, I get graphs for every single currency pair, which we cover on a regular basis. The dollar CAD's right here. You can see in this case that the dollar CAD, the majority of traders have been net short. The majority of traders have been short the Canadian dollar for some time now. And if you remember how the breakout 2 strategy works, it goes against the crowd. So it's buying into 24-hour breakouts. It uses a very simple 24-hour channel breakout strategy, also referred to as Donchian channel a lot of the times. That's how you'll see it on MarketScope. But if it breaks its 24-hour, the highest high of the past 24 hours, and traders are short, which they have been for some time now, then it'll go long. The problem is that traders have been short, and again, the strategy did very well for some time here, and it's given back a lot of those gains, unfortunately. Especially in the past 6, and we can go to see exactly what Guest is talking about here. It enters 5 positions at a time, so you'll see basically approximately 30 losses here, which is unfortunate. Obviously, no one wants that, but it is part of trading, as Guest says. You can see the daily SSI values always in the SSI report right here on Daily FX Plus. If you're not a Daily FX Plus subscriber, you can see them once a week here on the technical analysis sentiment section. So you'll have to be logged in, but you can see all the charts that I show on my monitor right now via that link right there. Again, it'll prompt you to log in, but you should be able to access that page. And if you're not a subscriber, you can see it on a weekly basis. Actually, the Canadian dollar is not covered on the weekly report. I apologize for the confusion there. So it's not actually on there. You would have to be on Daily FX Plus. Guest asks, is that chart you just showed available somewhere? I'm not sure which chart you were talking about, Guest. So feel free to clarify, because I've shown a lot of different things. And wait, you might have been talking about the volatility prices. It is not currently, but it will be once I get done here and finish writing up this report. All right. So it looks like I'm out of questions right now. Or there's a comment on facial hair here. That's nice. Thank you for that, Lori. But looks like I'm out of questions here, so I thank you all very much for your time. It's been a productive webinar. Oh, actually, I have one more. Okay. Guest says, thank you for the breakout 2 explanation. I thought it was triggered on some degree of change in SSI rather than the simple negative or positive. Also, is the disparity index native to TS2? If not, how can we get it? Thanks. Excellent question, Guest. So I apologize if there's any confusion there, because there's one strategy, and I was just talking about it now. So here's an article that tells you the exact trading logic of breakout 2. So you can check that out right there. And then the strategy that, and again, I apologize for the confusion, there is another strategy that depends on the change in SSI. And actually, now that I realize it, I have a 404 link here. I suspect there's something wrong here. Give me 1 second. All right. I apologize if you've ever hit this 404. But that's the Momentum 2 trading system, which does depend on the change. So that's one strategy where That's why I like it more this week, because part of the problem and the difficulty with just depending on the absolute value of the SSI is something you can see in the chart. It can remain extremely one-sided for a long period of time, which is definitely the case now in the Canadian dollar. So in this case, breakout 2 hasn't been working because it keeps on trying to buy into the rally because the sentiment filter is telling it that it should be long. Well, that should work if in fact markets are volatile, because this is something I talk about, and it deserves more thorough treatment than this. But basically, the SSI tends to work better, not always, but tends to work better when volatility is very high, or at least as a contrarian indicator. So in this case, the volatility filter was telling us breakout 2 looks good on dollar CAD. Unfortunately, markets had other things in mind, and the dollar CAD has just been consolidating. So it is what it is, but we're not going to press that trade. Notice I got rid of the breakout here on dollar CAD because we're not going to chase losses here or try to make it back when markets are this quiet. So it's an excellent question. Guest asked about Euro Sterling. Euro Sterling is kind of in an interesting spot. I think the sterling is running out of gas more generally, but volatility is very high. So it does suggest that people are betting on and or hedging against further moves in the Euro Sterling, as it's at fairly critical Fibonacci / price support. And if you just eyeball it here, I don't have it drawn, but just eyeballing this, you can tell that it's also near the bottom of a downward sloping trend channel. Whoops. Actually, well, it depends on how you draw it, because if I draw it from here, it looks more like a potential, price extreme. But obviously, there are many different ways to do that. So, it depends on how you look at it. Regardless, the fibs don't change depending on where you draw them, or I guess they could. But in this case, I think the July to February rally in 2013 is a big deal. And, well, markets also told us that it's a big deal because we stopped and reversed there not that long ago. And sure enough, this is an important level here. So Euro Sterling is an interesting spot. It could break down. That's not my base case. But in this case, it does seem as though a lot of people are betting on and hedging against further breaks. It could be in either direction. Like I mentioned in passing earlier, I've been monitoring price action or trade activity in British pound options, and you're not seeing that many people buy, at least not aggressively, protection to the upside for the British pound itself. I haven't looked at the Euro Sterling in particular, but it should line up fairly well with looking at the British pound against the US dollar. But that's where I stand on there. Oh, and I realized that guests had asked a question here. Is the disparity index native to TS2? It is not. There are a number of indicators which, as they grow more popular, we'll definitely start including them in the default builds, or FXCM will start including them. In fact, that's one of the pieces of feedback that we'll often get. I use downchain channels all the time. But currently, you have to download it to get it. Well, you can see all the indicators that we have available. The vast majority are free. Here on fxcmapps.com, it's super simple. You run an executable file, and you'll notice that some have a price tag on them. Most don't. The disparity index is in here. I know that for a fact. It's right there. Downchain channels right next to it. Another one that we recently threw up there last week, which is pretty cool, is the DailyFX support resistance wizard. So if you go to dailyfx.com, you click on technical analysis, you get a bunch of different support resistance levels. Well, one of the pieces of feedback we got is, can I get these on my chart? Sure enough, you can. So you download this indicator, and I can show you in action what that would look like. So go to the Eurodollar, insert, and once I install it, I'll go in here, DailyFX, support resistance, hit OK. Give it a second to load because it is reading it from the website. And there seems to be a bug. Of course there is. Oh boy. What's going on here? It's unusual. Not sure why this isn't working, and of course it's not working while I'm live, but, you know, it is what it is. Right. So then, that works, I promise. And I'll take a closer look at why it's not currently working in my system. I think I might have I might still have the alpha version that I was QAing for our programming services department. So that's probably why this isn't working. Apologize for that. All right. Yes. Joseph says, the software is mesmerized by your facial hair. Great. And Jay asks a question. Can you help me with fibs? I've been trying to customize to my colors, but it always defaults to the originals. Actually, I've never customized fibs. Can you? Well, if you change them, they should. Then, all right. Let me see something here. No, I don't know. I'm not sure. To be perfectly honest with you, I've never tried customizing the colors of my fibs in MarketScope, but you can definitely hop on there. And if you do change something and you don't want it to change next time, you can always go here and let's say that I wanted the 23.6 on all of my fibs. Well, all I would have to do is I change that and hit set as default. I don't really like the 23.6, so I'm gonna get rid of it. But for argument's sake. All right. Please show where you get the Yahoo app to show the prices in TS2. Oh, that's a little bit beyond the scope of this presentation, unfortunately. It's a bit more detailed. It's a bit more of a power user play. And even for me, it's too clunky to be of any use. So hopefully we'll have a better way to do it in the foreseeable future, in which case we'll do a more thorough, we'll do a more thorough, rundown of it. So, I mean, this is what it is. For example, and actually, did that even work? Yeah, it did. So you have to do things like create view, but this is an update, and it's just too complicated. So, Clark, hi, right back. And I thank you all very much for a great session. I'll wrap it up here. But if you have any further questions, don't hesitate to contact me. I'll be in the office for at least a few more hours. It is a holiday here in the States. So, and even if I'm not in the office, I'm probably on Twitter anyway. But that's the best way to contact me or anyone else on the Daily Effects team. If you want to reach out to my colleagues, you can always hop on here, real-time news, and click on anyone's facha right in there and access their Twitter accounts. I can hop in here and say, hey, Christian, what do you think about, so on and so forth, this fib level or this, GAN cycle, things like that. So thank you all very much for your time. It's been a great one. Thank you all, Grace. Great to see you. Best of luck trading, and I'll talk to you soon. Take care.